Today with us that consists of Mr. Anuj Sharma, Sushant Bhatia, Maya, and Shalini. We are extremely grateful to this esteemed panel of investors who have accepted the invitation and they have joined us for the session today. Going by the agenda, I would like to quickly introduce first our team and then would request the investors to go for their round of self-introductions. I can quickly go first myself. I am Kavita. I'm working with the Sustainable Landscapes and Restoration team at WRI India. Currently, I'm based out of Mumbai and I'm leading the Land Accelerator South Asia. Would like to pass on to Ashna from Sangam Ventures.
Thanks, Kavita, and hello everyone. Thank you for joining us. I'm Ashna from Sangam. We are a climate-focused venture fund and also partners with WRI on the Land Accelerator. And I'm an investment analyst looking at our agriculture investments as well as leading the program on this program. And thank you so much for joining us today. I will pass it on to Amanda.
Hello, everybody. My name is Amanda, working on the Land Accelerator here at WRI, based in Washington, D.C., at the global level, and happy to see everybody here today. Very excited to hear from our panelists and to have a chance to see some of our alumni in the audience as well. Excited for the questions we'll have and actually how this is going to help prepare us all for our meeting that we're going to have in Delhi in late October, early November. So looking forward to seeing many of you there. But we can continue with the intros, perhaps with Hari from WRI.
Thank you, Fabiana. Hello, everyone. My name is Hari. I am working in WRI India as a program associate in the Land Accelerator team. I thank all the panelists and the participants today. I pass it on to Fabiana.
Hello, everybody. My name is Fabiana. Great to be here. I am the Land Accelerator coordinator based in DC.
Thanks, Fabiana.
Suhail, would you like to quickly introduce yourself?
I think Suhail has not yet joined us back.
Oh, I just saw him. Okay, let's continue.
So maybe we can start the recording now. It's already started. So thank you, team, for introducing yourself. Again, a warm welcome to all the investors for accepting our invitation. And now I would like to invite all of you for your quick self-introductions. Going alphabetically, we can start with Anuj. Anuj, inviting you for your self-introduction.
Sorry, guys. I just lost the connect. This is Suhail, Christian Simple from Sangam, and working as an agri analyst based out in Guwahati. Very sorry. Anuj, please, kindly.
Oh, absolutely fine. So what Suhail is there in Guwahati and the internet is going is the epitome of what we actually work in, the geography. So primarily, we do something called place-based investing, and we are primarily focused on conflict and frontier markets. And going to geographies which are primarily not something which the normal investors are kind of focusing on. So we are focusing on most of Himalayas, Northeast, and Tier 2 and Tier 3 cities or geographies in most of India. And we have also ventured into Nepal. So I have a portfolio of 25 companies right now. And yeah, it's kind of growing good in terms of the, I will say, in terms of the impact they're creating and also in terms of the livelihood they are creating. And above all, it is also a testimony to lots of other investors who are now following up and joining hands together. So yeah, great to be here.
Thanks, Anuj. Over to you, Maya.
Hi, everyone. Maya Chandrasekharan from the Green Artha team. Green Artha is a climate investment and innovation firm. And our work basically sits at the intersection of climate finance and climate innovation. We, apart from a couple of other things, run the ACT Environment Fund. And from the perspective of, the kinds of organizations that we work with and that we look to fund and support, our focus is really across sectors. So we see climate as being very broad. We see it more as a horizontal than as a vertical. And obviously land use, land restoration are very significant parts of that. And we look for organizations that are at kind of a critical junction or inflection point just before full market adoption and growth. And so that's where we like to come in as funders, and then work with organizations to help them scale and grow.
Thank you so much, Maya. Now I would like to invite Shalini for introducing herself.
Hi, thank you, Kavita. So I'm Shalini Chabra. I represent 3i Partners. We are an impact fund which invests in solutions for the bottom of grid in India. We typically try to come in early at seed to pre-series A stage, and our key focus sectors, keeping this in mind, are ag, of course, but also livelihood, med, and education. We quite often see an intersection of climate along with the solutions that we invest in, and therefore we believe that there are significant areas of overlap, and it is possible to create impact at the bottom of the grid and also solve for climate-related problems. And that's basically all about us. Thank you.
Thank you so much, Shalini. And now I would like to invite Sushant for introducing himself.
Thanks, Kavita. Hi, everyone. Sushant Bhatia here. I'm representing Caspian Debt. We are an impact-focused debt fund who provide capital across multiple sectors. Climate and sustainability is, of course, a focus, but I think, as Maya mentioned, it's a horizontal lens for us as well, and it cuts across agri, clean energy, energy efficiency, and we have funded quite a few companies in the sector, and yeah, looking forward to the interaction and learn more about panelists and the participants. Thank you.
Thank you so much, Sushant. So now we are going to start this session with our rounds of chats, and I would like to invite my colleague Amanda for initiating the first round of questions. So over to you, Amanda.
I think I'm going to have to push that back to you, Kavita, because I just woke up here after coming in from a flight at 2 a.m. and I don't have access to the question document. But once I do, I'll be back on it. So I'm sure we can get that worked out. Just a lot of technical stuff this morning. So I don't know the question right now.
Amanda, it's an absolute pleasure to start myself. So I would like to start with the first round of questions, and it is open for everyone. So whoever wants to answer it first, please feel free to respond to it. So my first question is like, you all have tremendous experience in dealing with the entrepreneurs, and you keep on working with a lot of innovative business models. So what is something which entrepreneurs should do that catches your eye? You can cover what kind of entrepreneurs does your organization look for? Open to all the 4 investors.
I'll jump in because this is something that we do feel strongly about. It always catches our eye when an entrepreneur has really understood who they are building for. I think that is very critical, because very often entrepreneurs build because they're excited about either a technology or they are building to solve a problem, but who they are building for, having a really deep sense of that, I think is always interesting to us.
Thank you so much, Maya.
Let me quickly add to that. Clear customer focus. There's the Indian story of Arjun and his the eye of the fish, right? So that clear customer focus, as Maya said, is something that we also believe in. So it should not be so much about the solution as the problem they are trying to solve, and that the problem is a large enough problem and a problem that people are willing to pay for a solution for. So it's a problem, there's a clear customer focus, and it's a monetizable problem. The other thing that we really look for is that there is somebody in the team, in the founding team, who understands and has a technical competence which is deep and very, very well understood. So that's the second thing that we look for. And of course, the third thing that we really look for is, just the enterprise in the founding team, the level of enthusiasm, enterprise doggedness, what have you, just the ability to continue to go at it despite all the problems that they may face along the way. And the journey is never an easy one. Thank you.
Thank you, Shalini. Very interesting points from Shalini and Maya, both of you. Now looking forward to Anuj and Sushant.
Yeah, so our investment is very early coming in, like sometimes it's proof of concept or slightly at a early stage revenue. So for us, like since it's a place-based investing that we are kind of passionate about, we definitely need a local in the geography. So we don't invest in a person or entrepreneur, even if they are great, who are not from the geography and who are working in the geography. So we are very clear on that. That's one. Second is they need to be very clearly passionate about their own local economy, and they want to be fostering some kind of a community harmony to take that whole region to the next level. That's second. They need to be resilient, and they should also be clearly having an aspiration to be the market leader in the geography. That's very important. And they need to have at least kind of a impact story, which means that at least 3 SDGs needs to be fulfilling out of 17 they should have. And they should be clear about their sustainability side as well. That means they need to be for profit, not in terms of just the, I will say, the legal structure, but also in terms of the aspirations that they need to make money enough, which sustains in terms of their own way, not just because of the investor money. Yeah.
Thank you, Anuj. Very valid points. So the cohort is here and they're listening to all of you. So they're definitely going to learn a lot through your valuable insights. And over to you, Sushant.
Yeah, thanks, Kavita. So we at Caspian Debt come in quite late compared to, let's say, what Anuj was talking about, right? So we are talking about startups who have at least had 3 years of operations behind them. So apart from all the things that other panelists mentioned, few things that catch our attention is transparency. If the entrepreneurs are transparent about their information, about their expectations, it really sets the tone, right? And second thing, which we have heard from entrepreneurs, that we are not from finance background, so we don't know this even in mature stage companies, which I personally disagree with. When you start a venture, you have to have basic idea of the jargons and financials which investors are going to talk about, right? So I would say, yeah, these two things.
Thanks, Sushant. Very much helpful for our cohort. And now we would like to go for the next round of questions. I would like to invite Ashna for initiating the second round of dialogue.
Okay, thanks, Kavita. So the second question is around, when very early stage entrepreneurs, right? They go into the market looking for funding. So what kind of capital should they be raising, if it's debt, equity, or maybe a grant? So like, how can they identify what capital they want to go for, and at what, different stages they should be going for these kind of capital?
I'll go first.
Yes.
Sushant, this side. So I mean, firstly, it's sometimes or many times it's not a choice, right? It's a lot of times market decides, right? So that's always a factor. I mean, all of us know that, but that's always a factor. Sometimes a sector is too hot and all kind of capital it attracts, and then I mean, EdTech is a classic case. In COVID, sort of the capital was at peak, and now people don't want to touch the sector, especially investors, right? So that drives a lot of decisions which may not be in entrepreneurs' control. So we have to be aware of that, right? And then coming to type of capital, see, grant. I think everybody should explore grants, especially in social impact sectors we're talking about, right? Wherever you have especially technical experience or domain experience, and you should absolutely go out and research all the grants available and you should look for what are the returns that they're expecting, right? Grant also has return expectations. It will be in terms of impact or product validation. If it is, for example, there are government bodies giving grants like TDB, Technology Development Board gives a grant. They expect some technology product validation from you. Or if it's a healthcare, they will ask you, what is your reach? So have that thesis ready when you're approaching, and can you give that kind of return? So it is not return free, it's impact pure. So then equity, commercial capital, equity and debt are the two sources. Equity, see, whichever are, your moonshot goals, wherever you have the highest risk, right? For example, if you're going to do product testing, your product market fit itself is not yet done. You're currently establishing unit economics of the product. Equity is the right capital, but you should already have a minimum viable product before talking to any investor. That's one suggestion. Ideas are generally not enough for anyone except family, friends, and some fools who go in. A minimum viable product is any investor looking at, right? So once you have that ready, equity capital is the right. Debt capital is when the economics is already established and you're scaling up, right? So you've already established and there's a demand from customers. You already have a history of proven revenue, and if not profitability, there's a path to profitability. That's the right time to raise. So, yeah.
Thank you so much, Sushant. And yeah, I agree with you. Would any of Shalini, Maya, Anuj?
I'll just jump in here and just to say that one, fully reiterate everything that Sushant has said around, kind of the phasing. Two additional kind of perspectives. Yes, there are lots of things which are not in the entrepreneur's control, but in kind of an ideal scenario where some of these things are in the entrepreneur's control, I think it's really about, as Sushant was saying, aligning the use of funds with the source of capital. So making sure you're taking the right funds for the right uses. And there could be situations where, this is, I know, a good case scenario, where a company is relatively well progressed in terms of where they are. And there could be situations where both equity and debt could be appropriate, but for different purposes. One is around kind of maybe building out plant operations, and it's very established part of the business. And the other could be around testing out and validating a new business line completely, but on the same base. So that's another piece to think about. And, I think just two other pieces to think about is that any funder who's coming in, as Sushant, really very rightly pointed out, has a return expectation. So when you are in conversation with anyone, making sure that you understand what that return expectation is and that you have the ability to match that. That's something that is very clear, for example, when it comes to debt, because there's a number that's associated with it. Can you service that or not? Is sometimes less obvious, for example, when it comes to grant and equity, and therefore needs to be fully understood. And so I think that's a really important piece to get. They're all obviously sort of good case scenarios. Sushant set the tone very well by saying that it's not always in the entrepreneur's hands. So,
thank you, Maya. Shalini, Anuj.
Sure. Thanks, Ashna. So, the way we look at it is that there is a spectrum of available sources of financing, which starts at grants, goes into friends and family supporting you, goes into angel rounds, incubators, and then moves into the traditional VC space. And then at the other end of the spectrum is debt. I think the way we look at it is when you're building your product, either it's your own money or it's grants that you should usually try to target. And in some cases, maybe incubators and accelerators, right? Depending on the right stage. once the product is there and product market fit is established, even if you're very, very early, that's when one could start considering taking equity. And it should really, then there is this whole, what stage are you and what kind of equity you should be taking, which runs from seed to, whichever round you are. And once you have established constant, reliable, predictable revenues, as Sushant very rightly said, whether there is profit or not, but there's predictable, reliable revenues and a path to profitability, that's when the role for debt kicks in. And beyond Sushant's shade, then you move into traditional debt, where profitability is key as well.
Thanks, Shalini.
Yeah, so all of them have given pretty valid, I will say, comments already. Thanks, Sushant, Maya, and Shalini. So for us, it is like this. If you see, since we are coming very early, first of all, we see that entrepreneurship is not a punishment posting. They need to at least survive properly. So whatever the funding they are raising, that should be able to make them sustain, at least for the first year or second year. Otherwise, there's no point in having nowhere here and there. And grants have their own process. It takes time. And also they are linked to some kind of a very focused projects. So you do not have too much to maneuver in, even if you want, even if you talk about the government grants, which are there, they are all tied up with some kind of a technical assistance, which you need to go through one of the colleges, like maybe IITs or some other ones. And that is also no frill. You have to give equity, even though grants technically are not equity linked, but all these education institutions stress on that they have to get into incubation. They need to give that equity, and after that only the grants applications can go through. So we need to see how this whole process goes in. The second is if you are talking about equity, as Shalini said very rightly, friends and family are the first spectrum of things to start with. So the way we see it, it should not dilute the entrepreneur's interest overall beyond 10% in any kind of spectrum of fundraise that you do. And then you go to the next level where you are kind of putting across some kind of a revenue benchmarks and other things where the valuation specific understanding can come in. Now, valuation at an early stage entrepreneurship is a very tricky issue. Whatever we kind of talk about it, there's no math per se. It's a science and art both, if you put it like this. And India is still waking up to the culture of convertible notes. Even though we talk about it, we don't actually go inside, including us. So it's better to kind of start with something which is win-win on both sides as well. And believe me, if you are coming very early and you are ready to kind of go along with the entrepreneur, which I say entrepreneur first approach, invariably, entrepreneurs always give you back in terms of the overall returns as well. But in that, there needs to be a position of strength that you need to go in rather than position of suspicion or some kind of, if I say, weakness, because it is entrepreneur who will make money for us. It's not vice versa. And the ecosystem, when it all started 10 years back, it was all investor driven. If I put like this, the term sheets or the shareholder agreement, everything was one-sided. So at today's level, if you are asking me, things are changing for good. And in that whole thing, it also means that when you are talking about capital raise, there are some kind of flexibility which are also coming in terms of instruments and also the way you are defining the kind of returns that you are putting it across. So that's the way I can put it across. Yeah.
Thank you so much, all of you. I think it was very informative for all of the entrepreneurs on the call right now. And I will pass it on to Amanda for the next round of questions.
Hello, guys. Okay, so the question that we have next, I got to scroll up a little bit. Hold on. Sorry, guys, because I thought maybe someone else was doing it. Can you share a story about an investment from your company that you actually did or that your team did that you know was a success, and maybe talk about any of the factors that made that a success? So, I mean, I know I've been a lender here in Washington, D.C. to many businesses, and I have my favorite stories I like to tell. Hopefully you guys do as well. So I wonder if Maya, I could ask you to maybe share a success story of an investment, maybe what made it easy to give an investment to that entrepreneur, that company, and maybe what you might have seen afterwards, after that infusion of investment from your organization.
Yeah, absolutely. And I'm actually going to refer to a company that we have that is in the forestry space. So, hopefully that's somewhat relevant to everyone here. So what I would say made the investment sort of exciting and interesting to us was a couple of the things that, we've all talked about before from the investment side, which is that the entrepreneurs obviously had that. So this is a founding team. The founding team had that deep sense of kind of resilience, grit. They had a very deep sense of the work that they were doing on the ground. They were living where the work was happening, to Anuj's point of, where is impact happening and where is it being created. They were working with those communities, had a very granular sense of the operations of what they were doing, which to us is always very comforting, because this is not then theoretical. These are people who are actually executing and operating on the ground, and spent a lot of time building a very considered approach. And what I mean by that is that every time we asked them a question about why they were doing something a specific way, they had both research to refer to in terms of, why they believe that was the best practice, but also on the ground sort of pilot experience. So they had that nice combination of kind of theoretical and real time, understanding of why they were taking certain paths or taking certain routes. That was very interesting. And then I think the last piece was they were very, I think Sushant talked about this as well. They were very transparent. They talked about the mistakes that they had made and what they had learned from that. And so there wasn't this constant need to kind of pitch and present. It was a conversation, and that we really appreciated. I think Anuj also made a really important point, which is that as funders also, we have to go in as kind of partners, as opposed to, the people who kind of are calling all the shots. And so that conversation around how this organization is going to grow, how it's going to scale, how it's going to sustain, I think really gave us a lot of confidence about moving forward.
Well, I think that that's really important. I'm hearing a lot of how the team conducted themselves, living where they were working, a lot of technical expertise, focus on research as well as practice and tying that together. And basically, anytime you guys had a question, they were treating you like, trusted partners and not like people who were calling shots.
And not like it wasn't a marketing conversation. Plus, I think obviously as entrepreneurs, you have to feel the room, you have to understand the room. But again, just to reiterate, it was also just a question of sharing their learnings, right? They were sharing, we piloted this, it didn't work. In some cases, we've understood why it didn't work. In some cases, we haven't. But, both sharing what worked and what didn't work and how they are moving forward. I think that was tremendous for us.
That's really great. And now I wonder if we could pass the similar question to Sushant. If you had a success story that you could share with the group here today.
Sure. Thanks, Amanda. But I just want to add one point to Maya's, or agree with her. I mean, in terms of transparency and sharing, information is one thing, but also, I think Maya mentioned it, knowledge. Sometimes entrepreneurs think investors are know-it-alls. No, they are not. Right? So there is a lot to learn. In fact, investors learn the most from entrepreneurs, right? So sometimes entrepreneurs assume that the counter investor knows everything. That's almost half the time it's not true. So yeah. Okay, so in terms of success story, yeah, so a relevant case which I remember, which I have worked on last 7 years, and the company has also grown by leaps and bounds. It's now a known brand in India. There's a company called Shrestha Natural Byproducts. It has a brand called 24 Mintra. It is an organic farm to fork companies. We first funded them in 2015, and it was the first or second company that we had invested in food and agri sector. In fact, we were learning about the sector at that time, and organic food products in India, especially farm to fork, somebody working on the entire value chain was unheard of. It's very asset intensive business. Plus the market for organic food products was very small. It is still small in India. And why Shrestha? Because we love the triple bottom line impact it has had. Not only it's a profitable company, we have made good money because the company kept growing and they kept coming back for more funding, right? And as debt investor, that's the unique thing. Unlike equity, we can reinvest as long as our max cap is not breached, right? We can reinvest because it gets paid out again and again. So we funded that company 7 times in last 7 years, and they grew 8x. Their farmers network grew from few thousand to 40,000 farmers across the country. So I love that. And of course, because of the organic food products, the impact it has on the soil and climate also is a big factor for us. So it's a, I think it's a big success story for us, and we have tried to replicate it. Then we of course learned from them, and then we acted like we knew it all, and we transferred the knowledge to some other entrepreneurs, right? That's how it works. Thank you.
Well, I think I think a lot of people on this call would say, "Wow, if you're how would we be able to show you our company and everything?" So we can get to that later. But I know after hearing that, I feel very interested in hearing from all of you. Kavita, I think you were seeing something in the chat. I just want to check in with you because you are managing some of the time.
Yes, so I just want to quickly catch up with Maya to know at what time she would like to leave the session, as she has got some other occupancy.
I actually just pinged you. I have to drop now, actually, Kavita. So I was just saying thanks to everyone. Apologies in advance for disrupting the session. So I'll be really quick. I've really enjoyed learning from the other panelists, and good luck to all the entrepreneurs here. And I hope to catch all of you soon. Take care, everyone. Bye.
Maya, would you be able to stay with us just for 2 more minutes? Actually, we are doing a quick soft launch of a journey booklet for our previous cohort. So just a ceremonial launch today. Maybe you would see some glimpses of the booklet and then you can leave.
Yeah, so I'm really sorry. I think I've actually interrupted both Anuj and Shalini. If we can do the launch, it's fine. Otherwise, please don't disrupt their flow. I'm happy to drop off.
No worries then. I'll share it with you later. Thank you, Maya. Thank you so much, and looking forward to have a long-lasting relationship with you for supporting our entrepreneurs. Thanks, Maya.
My pleasure. Thanks, everyone. Take care.
Thank you, Maya.
Bye.
Thanks, Maya.
And of course, then I want to encourage everybody who's here today to actually think of questions you'd like to ask individual investors and kind of write them down, have them ready for after our panel discussion. Let me see, I think that we could be going to move to Shalini. If you have a success story from your investment history that you could share with us as well. And also if it's an old enough company, you can share what they might have been doing with the funds or how it allowed them to grow as well.
So we are a relatively new fund. We are just about 3 years old. So, we don't have long-term success stories, unlike Sushant and Anuj, who's been around for decades, right? But I'd love to share here about a company which is into phase change materials, a company called Tan90 Thermal Solutions. They are a team of technologists who develop these inorganic phase change materials, which then they put to use and look for sectors where the applications could be great. And the applications, of course, ag is a natural user to transport materials without an active cooling system. Pharmaceuticals, not really pharmaceuticals, but biologicals and other and vaccines could be a good use case. And that's the reason we invested. And let me share both good and bad, right? Their primary traction today does not come from any of the impact sectors. And it comes from commercial sectors. But what I love about the team and why we continue to support them is that though primary traction hasn't come from the impact sectors that we thought will is what they will grow with, they are constantly making the effort to run pilots, experiment, and genuinely have a forthright discussion about what's working and what isn't. And though they're growing very, very well, I love the fact that they're committed to trying to meet an impact in the sectors that they thought they would work in. So they continue to be, for example, they continue to provide some of their products to small fisher folk, work with other companies in that space, continue to work with smaller vaccine delivery guys at a small scale, ran a pilot across ag transportation. And we love the honesty, forthrightness, and frank sharing of information, even though they know that it's not what we really would love to hear.
So I think that that goes back, if folks here can remember, I think one of our sessions that we might have talked about, always innovating. If you can innovate, bring innovation into your team and actually come up with experiments that you can try weekly, your company can have 52 chances to make itself stronger, find new markets and everything. So I'm hearing that the spirit of innovation and actually doing innovation, actually trying new things is what keeps this company always on the front edge and always growing, which is a good company to be a part of, because you'll find new ways to grow, and that is beneficial for the investors as well as the company and the folks they're serving. So I really caught that innovation is something that you liked about that team, Shalini.
Yes, absolutely. Innovation and frank communication, frank, honest communication, not colored to what they think we want to hear, what they expect we want to hear, but just taking us as partners and believing that we are in the journey with them.
That's fantastic. And Anuj, coming to you on this question, last of course, but definitely not least, any success stories from your companies? And I think it's really great about the different geographic focuses you have. So very excited to hear one of your stories.
So I may share like two, not just one. Like one is like, which is into extreme conflict zone, if I put it like this. So this company called Fast B2. It's a last mile delivery startup. And we started like engaging, and also I was the like first investor in their company way back, like 2.5 years back. And Kashmir is not known for startups. Like if you ask, like that is the last destination, so many people will say. But I've been kind of like as a team and as an individual also, like we were kind of studying this area for quite some time, and it has a pretty strong potential. So to give a statistics, like it's $100 billion economy, just Kashmir alone. And they have a very strong export market as well. Close to $10 billion of exports happens there. And there's not a single organized logistics player for whatever reason. Like we talk about conflict, but we don't talk about the opportunities as well. And that's where these guys, like one of the guy came from Dubai. He was one of the architect of Dubai Metropolitan Tech architect, if I put it like this. He came back to Kashmir. And one of the other person was working in another startup called Kashmir Box. And both of them are phenomenally amazing. Great, like I will say, like they bring synergies in terms of the kind of technical, if I say, complementary things. Second is they were having a very clear thing that they wanted to elevate Kashmir in terms of positive startup destination as well. And from the time we kind of invested in them, they have kind of raised 2 rounds now, properly, smaller ones still. But the bigger thing is that they've went from 6 people team to 105 people team today. And they are the most visible face of that whole region, to the extent that they have been covered in New York media. They have been covered in European media. They have also covered in extensively in all the leading like medias in India as well. They had like a quarter page coverage in Economics Times twice, because there are not many stories coming out of them. And these are stories not just about success, but also about scalability and others. So today, as we are talking, they are like market leaders in their own space. And also now they are actually looking and they are prepared for getting into a proper larger institutional investor as well. And there's lots of good response which is coming. Your story, Shraddha Sharma traveled all the way to cover them herself. So that's the kind of phenomenal, I will say, the success stories we are talking about. So it's both about impact, but also about giving him kind of an indication that it's not about a geography that we are just talking about. We have lots of biases and investors as well. But if we break the bias, just like India as well, 20 years back, the similar kind of bias was there. If I'm coming from US and Europe, like they felt like India is a developing country and it may or may not survive in terms of when they're investing from there. But today, lots of success stories are there, lots of great returns which people are getting, the investors are getting. Similar way, like first mover advantage that we have got. At the same time, first mover advantage is there with respect to the people who are we are backing in. So that's one quick story I wanted to have. The second is, which is slightly on a different note, is a company called Bright Blue, which is like a person of Vibran. He's primarily from Netherlands. He made India as his home 8 years back, and he only knows one thing is electric mobility. And he was talking about electric mobility when most of us were not even thinking through it. And people felt like India is not at all ripe for getting into electric mobility because charging network is not there, and the roads are not good for electric vehicles, and so on and so forth. And 3.5 years back, like he took the courage to start Bright Blue. And at that time, we were one of the first people who kind of back him up. And then he kind of extended and did a merger with another company which was having a tech solution called Driven. And today, Bright Blue has kind of got the investment from one of the very well-known face from Europe, Hayes Colin, which is who was ex-Booking.com CEO, and also one of the earliest investors of Uber. And apart from that, the investment success, it is also about the success of the whole story. Today, we are talking about mainstream of electric mobility, the charging network, and everybody's talking about it. So he was ahead of his time, and we are proud that we supported him. And we may get an exit very soon as well from that. So not a very bad track record. If 3.5 years you take to get an exit, it's not a bad track record for us as well. Yeah.
Well, congratulations to your team as well as that team as well. And thanks for sharing those stories. I'd like to pass the mic back to Kavita. I think she's going to share a few things with us.
Thank you so much, Amanda. So we are really excited to do a quick soft launch of the success journey booklet for our previous cohort. It captures the stories of 11 innovative entrepreneurs who have scaled up. And I'm sure that this is truly going to inspire the first generation restoration entrepreneurs from not just India, but the globe across. And then I strongly feel like the investment ecosystem should also find this booklet very handy for knowing more about these entrepreneurs and learn about their ask and their journey. So we can quickly take a look at the booklet and then can celebrate the success of these restoration entrepreneurs. It recognizes our 11 entrepreneurs from different states all across India and presents their stages of growth, their achievements so far, what are their next steps, and what is their ask from the investment ecosystem. They have already graduated from the program and they are scaling up. This booklet is available online from next week and for public use and download. So we will be putting it in public domain next week, and I'll be sharing a copy over email with everyone. Thank you so much for joining us for the soft launch of this booklet today. And now we can go for a next round of questions, and then we will quickly open up for the question and answers and the follow-up discussion. Thank you, Hari, for sharing your screen. And now over to Suhail.
Yeah, hi everyone. These are some few basic things which anyone can pick up from the panelist side. First is I am an entrepreneur, so I'm sure that I make mistakes. So the question is, if I make mistakes, how should I avoid it? And if you have seen some mistakes, common mistakes which has happened from the entrepreneur side, which you would like to highlight? That's one. Number two, as an entrepreneur, once I'm excited and the pitch was really great and the investors showed a lot of interest. And there comes a call after 2 days from the investor side, and I'm not ready. So in this case, how should I be prepared? What kind of questions would flow from the investor side? You can say the calls which are coming after the pitch. And third, as an investor, how do you really pick up the entrepreneurs? Like if I send a mail to you and it's really good, you are able to pick up from that, or a deck which I send to you, or the last but not least would be usually do the presentations, live presentations or maybe virtual presentations in form of a pitch presentation which we prepare for 5 minutes or 6. So these are the few things which are coming in my mind. I would like to first ask Shalini if you would like to answer that, any one of them.
Sure. So, we are very open to people approaching us pretty much in any which way. We are very happy to, in fact, reach out to people who we think are doing something interesting and we come across them. So, somebody or the other might have seen a LinkedIn request from me or my colleague saying, hey, we'd love to connect. And we are very happy to do that. We always go through information and mails that come into us through our website portal. So feel free to reach out through us through that as well. It is always better to at least send a small pitch or what you're building rather than an email which tells us nothing, so that we can have a sort of a opinion on whether there is a preliminary fit between our thesis and what you're building. Because for most investors, the thesis that they have is critical and they're not going to really go too far away from that. That's second. I'll take the second question next. What if I'm an entrepreneur who receives a call from an investor following a pitch? What kind of questions should I be prepared to answer? I mean, if you know your business, you're prepared to answer them. Don't over worry. Just be honest, answer. And if there's something you need to figure out and get back, say that very, very frankly. We are okay. But and this goes to the rookie mistake that people make sometimes. They say they'll get back, but they don't. And honestly, though, if it's something which is extremely interesting, there are times we may follow up, but we love the fact that there is an entrepreneur who is enthusiastic enough and diligent enough to get back to us when they said they would. And within the time that they said they would. And please, the time should not be infinite. It can be 2 days, it can be 4 days, it can be a week. Right? But it can't be 3 months and 6 months. Or say that I'm not prepared to have this conversation now. We will reach out to you and come back to you in 6 months' time. But if you're answering a specific question and query, then come back within a reasonable time frame.
Thanks, Shalini. It was short but very critical and crisp. Now, Sushant, may I have your opinions on the same?
Yeah, sure. Thanks, Suhail.
Welcome.
So one of the things that I have unfortunately seen few times and with peer investors as well, sometimes entrepreneurs are reaching out randomly to investors without even reading 20 minutes about them, their sector focus, their ticket size, their geography focus. I mean, I sometimes feel very unfortunate. Sometimes there are great businesses and people just lose interest. The reader will lose interest if you are not even doing that basic research, right? So that is, I think, non-negotiable. If you are approaching an investor without reading about it, you may as well forget what is going to happen in future, right? Chances of getting a reply are slimmest. So, and it is a simple thing to do. Everything is available online, right? So very simple. And it is truly a rookie mistake. Hopefully someone who does this once will not repeat it twice or thrice, but you never know because you never hear a response. And then you keep wondering, I had sent this email, I sent a message on LinkedIn also, I still didn't get a response, right? Maybe that's the reason you didn't customize. Ultimately, investors, except angel investors who are investing from their own pocket, they have a very wide, they might have ticket small, but they have a very wide spectrum. They can invest in whatever floats their boat. But investors are managing somebody else's money, which is very, very specific most of the times, right? Unless you're a private equity fund who's signing billion-dollar checks. So that's one. What was the third question that you had? I wanted to.
So
I think, yeah, the simplest thing again, which has also become helpful now because of LinkedIn, Twitter, and whatnot. A warm introduction always helps. So if I'm an entrepreneur, I will have to make that first attempt to find if there is any common connect with the investor. Have they funded an existing company whom I know? If that founder reaches out for a warm introduction, you can be 100% assured that you are going to receive a reply from the investor. So that's the first step. You may not always have a common connect, but that's something that takes little effort to find. And getting a warm intro always tops cold emails. So that would be just, a suggestion. Thank you.
Thank you, Sushant. Now, Anuj.
Yes. So, well, mistakes should be stopped today. Like, I think, first of all, what we have to also kind of, like, if I put it very clearly, is like what I kind of heard from Shalini and Sushant is like, and I resonate, like, you need to do your homework for the investors very well. Because if you are not doing and you're not kind of taking some time out, you are doing a randomized trial, which is going to have a very good chance to fail. So that is something which I will say is a top priority. That's number one. And second is, like, if you are kind of talking about a business, because we come very early, and I like the money which we are deploying is my personal money, not a fund money, if I put it like this. We are very cautious about the way we would like to put the money in. And since it is impact first, that means if you are not an impact driven company, they are not even relevant for us. And our investment thesis is also local, like place-based investing. So these are two important things that we need to be very clear with. And if you are an entrepreneur who's wanting to kind of get into a geography, let's say you are from Bangalore and you're getting into Arunachal, working there, and you're expecting investment because of the Arunachal thing, maybe we are not the relevant people coming in. Second is, if you are receiving call from like us, like following a pitch, like, I think one of the important thing again comes in is like, for us, like, we need to see whether you are resilient and you're not going to shut down your business in the next 6 months or 1 year and going away. So that kind of a thing you need to be clear with, like, can you give that kind of confidence to all of us, like, that you will sustain. It's not just about money. If only for money you are running the company, then you are actually living somebody else's dream, not your dream. So we are investing in your dream. So you're not doing the dream because of the investment, but you are doing this dream because you want to create a legacy and you want to create a far outreach efforts that you are creating, not just in the local economy, but also for yourself. So that kind of thing needs to be resonated in. And that needs to be also be demonstrated, if you put like this. Many times we are also too much into pitch decks and also Excel sheets. And I think that is not something which enterprise should waste too much of time in, even though it is very important. Because the reason is, like, your business is very fundamental. And in that, sometimes you can hire some people to create a very good pitch in Excel models as well at an early stage. Obviously, at a later stage, it becomes a paramount important thing. So having some kind of frank conversations around what are the things which you are good at, what are the things you are not good at is also important. And in that, like, seeking help is always important. Like, sometimes you may have a very good kind of a business idea and also you have demonstrated it out, but you are not very good in, let's say, making a very good Canva or let's say a financial model. So there needs to be a clear thing that we are talking about it and kind of expressing your kind of willingness to get the support as well. And if I send an email to you, what is a great email or deck? As I said, like, deck doesn't excite us. We like real entrepreneurs and we normally go on the ground. So it's good, like if you give a call to us, inviting us to visit us at your place. That's the best thing.
Yeah. Thanks, Anuj, Shalini, and Sushant. And I'm sure Maya would have the same comments on these questions. So, if I can see what the most important thing is, organize research that is for on the investors. Do your homework well, and be aligned to the thought process of the investors. Don't go just randomly. Number one. Number two, very important time. You have to respond on time as per your commitment. That is what the investor expects. Number three is the confidence, confidence of uh, doing the business well. So even a follow-up call comes, you'll be able to answer that properly. And warm introduction. I think that is also very important while pitching or while relating the warm introduction of your organization will obviously come. And last but most important thing, which Anuj has also mentioned, if you leave your dream about what you're doing, everything will come in place. So with these few lines, I would pass on to Hari. Thanks, everyone. And Hari, hi, Hari.
Thank you, Suhail.
Thank you.
I think we can open the floor for questions. So in the chat, there is one question from Shweta. She asks, social impact often involves qualitative progress also, in addition to quantitative results. How much open or accepting you are to these qualitative results at ground, or how strictly particular investors are for quantitative figures? So any one of you would like to answer?
I'll try to take that. Thanks, Shweta. So I think especially in early stage, when a startup does not have resources to monitor the progress, that question might arise. I think at a mature stage, the answer is short no, you have to quantify it. I mean, there are romantic answers, but the investors won't like it, right? They would want to see data, validated data. But in early stage, what I can think of is if you're struggling to monitor metrics, etc., make small case studies. It can be audio, visual, it can be just a page, one page. So try and narrate your story through these audio, visual, or case studies. And I'm sure the listener or reader will find it attractive. This is one thing I could think of.
Anuj and Shalini, do you want to something?
Just add one quick line there. You know, even at the earliest stage, something that is not measured does not get delivered. Therefore, even at the earliest stage, I would recommend that if you have an objective in mind, you have an impact in mind, track it. It may not be audited, it may not be anything, it may just be your data. But please do track it, because otherwise you'll be surprised that you didn't achieve it.
So the next question is also similar to the previous one, and it's just a one-word answer maybe. How important are numbers for an early stage startup to be considered for impact funding? Where do they stand in the spectrum for investment? This question is from Tapasu Woods. Anuj, maybe you'd like to go first.
Yeah, maybe if I put it across. So for us, like, impact is a very important parameter, and specifically since we are getting into a place-based investing model. For us, like, since it has to be a little bit more clearly defined, so we use the SDG model, like, which is 17 SDGs. So minimum of 3 SDGs needs to be fulfilled, and some of them are qualitative as well. It's not quantitative always. And when we are talking about the numbers are also indicative of the kind of a way you are starting our proof of concept and getting into the pre-revenue stage. So it needs to have a trajectory which is easy to define and also quantify. So when I say quantify is in terms of your impact, if I put like this, and also the way you define. So if I kind of borrow Sushant's thing, like, your narrative becomes very important at a very early stage. So storytelling capability is not just about talking about the way you will do your business, but also talking about the way you impact the communities and also taking your business to the next level. And the success of your business will also be determined by how strong your brand will have a recall in that geography. So if you need to be market leader in the geography, you need to have something about that geography which makes you a differentiator as well. So that is something which we look at definitely.
Thank you, Anuj. Sushant and Shalini, do you want to add?
I have nothing much to add here, except very important. I mean, because ultimately this is money being invested, numbers will be very important, right? Now this will become very different for the kind of investor. Somebody might be interested in pre-revenue companies and that's their focus, right? So you'll have to tell them different numbers though, right? What kind of progress are you doing? You have to show some numbers, right? So I would say very important.
Thank you, Sushant. Shalini, do you want to add?
No, I think they've covered it.
If we don't have any question from anybody else, I would like to go for a question. So it's open for all of you. Maybe you would like to share some of the best practices around your expectations from people pitching on demo days. Like what should be an ideal pitch and what aspects it should cover?
I'll go first. So I think I touched it. One simple suggestion would be, again, if it is a demo day, you should customize the pitch and don't go ahead with the standard pitch that you have been using for every investor. Just identify who are the investors, do a half-an-hour research, and you can customize your content. Whatever you're saying, not just pitch deck, whatever you're saying can also be customized, right? So that would be the one suggestion.
Thanks, Sushant.
Yeah, if I kind of mention it, like obviously, like what Sushant says is absolutely the easiest and most important thing here. Like doing the research also means like some of the investors may not be like suitable for you. So it's important like you customize it in the way you want to kind of get, let's say, what are the stages of your investments are. And at the same time, what kind of investors you also want. Like it is also important for the entrepreneurs now to also realize that certain investors may or may not be the right fit because of the sector alignment or some other aspects which are important. So that is very critical. At the same time, if you see the other thing which is very important in this whole aspect is like if you are reaching out to a wider audience and if you are doing what Sushant says, a barrage of things like in the similar way, like which you have done in a tech institute, a social kind of a conference, and now getting into a demo day, then you are kind of not serious about this whole thing as well. So we're talking about demo day for WRI. WRI is known for some very credible things. So, but this whole pitch should resonate with the WRI theme as well. That's one of the reasons we are all here as well.
Thank you so much, Anuj. And Shalini, would you like to add some more points?
So I'd just like to say in terms of content, explain clearly what's the problem, what's your solution, and where are you in terms of traction or your stage. Don't walk around on eggshells on stuff that you think you don't want to show, because for every business which is going to succeed, there is an appropriate investor. Sushant or Anuj or me may not be the right investors for you, and that's fine. You should take your own decision on who is a fit for you, which goes back to what Sushant was doing, research, but research and see if there is a fit. And just as we would not invest in something that aligns with does not align with our thesis, you should not take money from people who do not align with your thesis for the simple reason that they have expectations on you doing stuff which you do not want to do and which is not appropriate for your business. So it makes for going to be a very long-term relationship. It's best based on a good fit of what you are trying to achieve and what the investor invests in.
Thank you so much, Shalini. And these are really very quick pointers for all the cohort members, especially when they are going to present on the demo days in the upcoming months. Thank you everyone for sharing your inputs. And now I can see we have one hand raised from Ravinder. Ravinder, would you like to ask your question?
I hope you can hear me. Yeah, thank you, everyone. First of all, Shalini ma'am, Sushant sir, and Anuj sir. Myself, Ravinder Singh. I am representing Nutraceutical Rich Organic India Private Limited. Actually, our story started that I am doing action research in Chhattisgarh, and from there, with the working with the community, I came to know about the millets, and then we started working on millets. We created value-added products on millets with the brand name of Grandma Millets, and we've launched it on Amazon and Flipkart recently, and we have got a good results. So there is a ample scope of value addition in millets if we actually see, and the places who are basically doing organic millets are the places where the tribals are very restricted to use of fertilizers, and they have a slopy land where water does not actually stand. So first of all, Chhattisgarh is a very good place in geographically in that particular stand, and then Madhya Pradesh and Uttarakhand has got a very good potential in millet products. So we are actually working on it. I can understand that Sushant, Anuj sir, that you have mentioned that basically I am from Prayagraj, Uttar Pradesh. I'm based in Uttar Pradesh, but I'm working with tribal community of Chhattisgarh and Madhya Pradesh and Uttarakhand. So in the days to come, we would like to actually, we are into healthy snacking segment right now. We are creating cookies, and that too is a very healthy.
Excuse me, we will need to get to the question just as we only have 10 minutes left. So I just wanted to remind you. Thank you.
Yeah, sure. Actually, the question is if this kind of early startups, we have shown our, we have like turnover of some 36,000 US dollars and 20 lakhs of like 25 lakhs of our turnover. So what we can actually expect from funders to whom we should actually present ourselves first, that I just want to understand. Thank you.
So let me see. I know Anush, go ahead. I think I just wanted to understand the question as well. You're sharing your stage, like how much money you're making every year is 36,000 in turnover. And you're asking with that kind of turnover, what sort of funding can you expect? I believe, was that your question, Ravinder?
Yes. Perfect. This is my question.
So I think, Ravinder, we can go in a very different way as well. Like, first of all, you need to also identify what you will need for the next 1 year minimum in terms of your growth that you are maintaining. Let's say the momentum you are maintaining. So that could be a very good parameter for you to think through what kind of fundraising you can have. And you can classify into 3 buckets, which is more easier because you need to also be realistic sometimes. So first is the pessimist. That is the minimum threshold you definitely need. Otherwise, you can't survive. That's one. And second is a little bit of an optimistic thing, which is like, if everything goes well, the moonshot, if I put it like this, how much you can grow. And third could be more of an optimal thing, which is a mix of 2. That this is like something which is a kind of a thing which, if it comes, if it is not a moonshot, still it will be a very good run that you can have. That could be a good parameter for you to start. And then you go backwards in terms of evaluation and other things as well. So if nothing goes well, like at least you can have some kind of a range of valuations which can work around. And that can also help you in terms of if you do everything good, you settle down with a better valuation. Otherwise, if things are not going good, then it could be more of an investor driven side as well. And these types of structures are pretty plausible. Yeah.
Thank you so much.
Next, we have Amlan. Amlan, would you like to ask your question?
Yeah. Hi. My question is, how much would an investor would support the entrepreneur in networking or business development aspect. Like for instance, we are into organic input manufacturers. So if Sushant invest in us, will he help us connect with 24 Mantha and help us generate more revenue? So I just want to know that how much, I mean, it's apart from money, what can we expect from the investor? It will help us choose the right investor for us.
Yeah, Amlan, so I think that's a question you should always ask when you're looking at an investor. What is the other value add? I think that's an absolutely right question while you're seeking capital, right? What is the other value that this investor can add? And once investors have skin in the game, right, they will surely help you in networking. I mean, not just with portfolio companies, other investors. I mean, they will not go and do business development for you, right? But they will definitely help you connect with their network, be it companies or other investors or other finance capital providers, right? I think that every investor does. But again, while you are while you're talking about this, then you should look at the kind of investor who has experience in it, right? That will reduce your list, and it's a great way to look at it. But I would definitely suggest this approach. Sorry, Amlan, if you're speaking, you're on mute.
After today's conversation, I think this point became very important, that how we also, as entrepreneur, we have to choose our right partners. So yeah, and I mean, one little thing in about that. So when I'm pitching, should I, when I'm, as I said, that you curate your pitch to a particular investor, if you are investing in this kind of panel. So we do the research and we figure out who can network with us. And so when you are telling the story, give that hint to the investor or something, put it in the presentation itself, when you are presenting in the dialogue.
Sorry, I didn't understand. Are you saying, let's say if there is a demo day or panel and there are like 5-6 investors there, but you have identified that there are only 2 investors relevant? Yes, you can customize the content. One slide you've identified that this will be relevant to these 2 investors. Yes, I mean, not explicitly mentioning that, but definitely you should indicate that these are the right kind of fit with investors. Yes, you should.
Yeah, thank you all. Thank you very much. Somebody else, please.
Thank you, Amlan. If anyone has any other question, they can unmute and ask.
Would also like to encourage my teammates if they have any follow-up questions or any new questions. So feel free to ask.
I actually have one as well. And I was actually wondering to all 3 of you, how are you interacting with different programs such as the Land Accelerator or other competitions and stuff? Do you find that as a good source of deal flow for you? And how can we do a better job? And I think everybody hearing that can then know exactly how we can work to be more of a pipeline partner for investors such as yourself. Thanks. That can go to anyone. I don't know. I think we're being casual, so just answer if you have an idea.
So maybe if I go first, like I've been associated with WIRA now for almost 2 years now, like if I'm not wrong. So you all have like some amazing bunch of entrepreneurs. So if there could be a very simple central repository and also showcasing some kind of growth in them, like what kind of stages, because let's say you have showcased some entrepreneur 2 years back. What is the stage today? Like you may still, they are part of WRI in some or the other way, but how you kind of see their growth coming in and what kind of important milestones they have achieved, like in terms of, let's say, if they have raised a fund or they have not raised a fund, but they have kind of got into a certain geography, they have expanded. There's certain parameters which are easy to put it, but you have such a awesome, like I would say, resource. But if it is not together, like every time when we talk, you send a bunch of entrepreneurs, but the previous ones, we don't know what happened as well. So if there is a way kind of consolidate that whole amazing think it will be great for the ecosystem and also to WRI cause.
Well, I think that's really useful for us, and we will be working on that. We're going to be doing a follow-up survey of all of our alumni and adding to the databases that we do have. So thank you so much, Anuj. So yes, consolidated information and all in one place. That sounds great.
And I would like to what Amanda said, that we are publishing some compendiums like this success journey booklet is coming up, and then we'll be doing a follow-up with you through our brochure and these kind of booklets, so that you are able to quickly assess how the companies are scaling up and what is their current stage of growth. So if anyone else is not having any questions, I think we are exactly finishing up on time. So would like to quickly wrap up this session and would like to extend a formal vote of thanks to all of you, Anuj, Sushant, and Shalini, for showing your very humble response and accepting the invitation. We would definitely like to invite you to the in-person demo days that we are going to have in the month of November in New Delhi. So after the 2 years of pandemic, this time we are doing it in person, and we are looking forward to a very good panel of investors and also a good group of companies, our top 15 finalists who would be pitching on the demo day. We will be reaching out to you separately, and some of you would have already got my invite for it. Thank you so much for joining us today. Thank you so much for sharing your valuable feedback and answering all the questions patiently. So would like to pass on to my other teammates for their closing remarks. Over to you, Ashna.
No closing remarks as such, but thank you so much, all of you, for joining today. And I think the session was very valuable, and your insights were very valuable, and the session was very informative. So thank you so much for joining us today. And now I'd like to pass it on to Amanda.
Yes, really just wanted to thank the investors who joined us, as well as the entrepreneurs who come out, because this is only going to help us do a better job of doing this kind of outreach, of telling your stories and being, open, being innovative, and communicating. And so I want to thank to Shalini, Anuj, Maya, who left earlier today, as well as Sushant. Thank you so much. And yes, look forward to our demo days. We are going to have a lot of fast pitches, a lot of networking. So if you've liked what you've seen over the past couple of years, be sure to check us out in Delhi. It's going to be Wednesday, November 2nd. So if you can even throw a mark in your calendar, I'm sure that the team, Kavita, Hari, Ashna, Suhail, will be reaching out to you soon, really. Just a bunch of thanks all around. And I don't know if anybody wants to unmute themselves and just say goodbye, feel the group energy and everything today. Feel free to turn on your camera or open your mics and just give a wave to everybody. It's good to see you all.
Thank you, everyone.
Thanks, everybody. Good to see you.
Thank you,
Good to see
everyone.
you.
Thank you.
Have a nice day.
Fabulously organized as always. So thank you so much.
Thank you so much.
Thank you, Shalini. Thank you, Anuj.
Bye.